what's happening? Drew's in the house. Mohammed, how are you today? Paris Inspire, good evening, good evening. User 33546, how are you doing? Frost King, what's going on? Len, back again, I see. Len, you wanted me to look at something last night. What was it today? Okay, do you remember last night? I told you we'll check it out tonight. So what do you got? Thank you there, Len. Frenchie, Pengia, Jerry, Jose Estevas, ¿Qué pasa, amigo? Larry Hicks, Margarita, Marcelo. I think it was UNH. Freckled Queen, good evening, good evening. Miss Julie, nice to see you again. Up, downs in the house. Alrighty, alrighty. Jackson, Julie, Marcelo, Linlaw, LK Phelan, Everett, Apple, Johnny B, Jacob, Taddy, what's going on? All right, all right, all right. Enzo, Richard, G-Will. Interesting name, G-Will. Alrighty, so let's do this. First one on the list today is going to be UNH. I don't know why we're looking at it. We looked at it last night. Not a lot's going to change between then and now. UNH. Yeah, we talked about this last night. Remember we said after this big drop here, there should be a bounce up. Well, let's see if it did bounce up. Ooh, Johnny wants to look at ISRG. Oh, boy. ISRG. We'll look at that in a little bit. Right now, we're going to take a look at, what are we looking at? UNH. All right, let's do this whole thing. Here we go. The high, the low. Where was it? Where is it? Look at the motion. Down, up, down, sideways. Big drop right there. What happened? Well, let's zoom into it. Because that big drop right there, remember we said last night, that baby's going to hit the bottom, turn around, go back up? That's exactly what it did. That's what it usually does with a big drop like that. So how do you play it? Nico, what's happening? Good evening, sir. Trading Girly, how are you today? You should give me a buzz. We should chat, do something together. I like people that trade for a living. All right, so here's where we were. Here's where we are. Look at this. Up, down, up, big drop. Now she's bouncing up again. Now, for me personally, I like 2 days to the upside. Okay, we already have one today. Tomorrow could be the second one, and then Monday could be prime for us to consider it, if you like UNH, of course. So let's take a look at the 294s. Do we have 294s? No, we got 295s. But look at the price that they're offering. Now, when I say look at the price that they're offering, what I'm talking about is doing a covered calls. Well, we buy the stock, turn around and sell the option just to collect a premium or some cash flow. So, 294.02 is the current price. And if we sell the 295s, we can pick up $6 per share. Well, that's a nice return. Let's take a look. We're going to change it from single to covered call because that's what we like. Simple, safe, predictable trading. I like simplicity. Just one contract. The market, and here we go. Here it is. I always tell people to always read out loud the offer that you're looking at before you send it. Okay, buy one, covered call, UNH. 6 February. That's not this Friday, it's next Friday. We don't have enough more time left in this week. We got tomorrow and Friday, that's it. 2 days is not enough time for any kind of consideration. So we're going right to next week and see what they're offering next week. And as you can see, the 295 call option is $824 per contract. Okay, well, each contract is 28 grand. So the question you need to ask yourself, number one, does it make sense buying a good company, turn around, reselling it for a profit or a weekly cash flow? Okay, or do you like this company enough to put some of your hard-earned money into with the realization that it is a stock and they go up and they go down? Well, we're looking at the bounce coming off of a big drop and tendency to bounce and go back up. So we're only looking for a 5 or 6 day play, which means I jump in and I tell next week's option to get that $824 per contract. What do we have over here? Len, about vertical spreads. Yes, I do not teach vertical spreads here for free. Terribly sorry. I give away this strategy for free, Len. Okay, simple, safe, predictable, consistent, 1% a week. That's over 50% per year. Okay, if that's not good enough, well, you know what they say. Okay, sit tight. We'll get to all those questions. Now, I do try to get to all the questions. Tonight, we are back to streaming on 9 different platforms. So, yeah, it'll be a little bit slower for me to get to some of the questions. So, just bear with me. All right. So, to find out the rate of return, we got to take the profit that we're looking at, divided by the investment that's required. Now, remember, in the stock market, you never win money, you never lose money until you agree to sell at a profit or you agree to sell at a loss. One way or the other is a conscious decision made by you. So where you jump onto the merry-go-round is irrelevant. So if I'm going to jump on at 294, that's my price. From this day forward, it's always going to be 294. So next week, what did you get in at? 294. Well, 5 months from now, what is it going to be? 294. It never changes unless you dollar cost average. And that's a different conversation. But at this moment, we're just looking at the entry price. At this moment in time, 294.02. And yes, it changes every 2 or 3 seconds. So don't think that you and I press the button at the exact same time, we're going to pay the same. Doesn't work that way. It's kind of strange because you say, yep, throw the dart now. That's basically it. Throw the dart now unless you do a limit order. And the limit order says, this is what I want to pay, and that's it. See, I don't do those because they can sit on the market maker's computer all day long, and he's not required to fill them. However, he is required to fill a market order. If he offers it for sale at the market price, he's required to fill it at that price. Market orders are for us strange Americans. I want it now. I don't want to wait. Okay? Well, that's me. I want it now, and I want to get on with the rest of my life. I'm only looking for 1%. And if this stock can give me 1% and I like it, well, then everything's going in my favor. So let's take a gander. Profit, 824, investment, 28. So let's get the calculator out and find out exactly what rate of return that is. All righty. 824. I'm going to divide that by the investment, 28. 676 gives a grand total of 2.8% for 1 week. Well, yeah, it sounds lovely because remember, 1% a week is 50% a year or more. 2% a week is 100% or more. Can you imagine what 2.8% is? Now, you're not going to get 2.8% every single week, so let's not kid ourselves. It's a crapshoot. Do you know what I mean? You're like rolling dice, it's a crapshoot. But here's the thing. Once you buy, however many shares you buy, okay, in direct relationship to the contracts, because one contract is 100 shares. 2 contracts, 200 shares. 11 contracts, 1,100 shares. So I like to buy in 100-share increments because it gives me a contract, and I can buy and sell that contract whenever I want because I own the stock, I control that ability. So regardless if the stock price goes up or down, I really don't care. My concern is the company consistently profitable? If they're consistently profitable, okay, then that contract has value. It's called in the money, at the money, out of the money. It's a little confusing at first, but once you understand it, it's like, oh my goodness, can it really be that easy? Well, it was created for a 9-year-old little girl. Okay, my daughter was 9. She said, Daddy, what are you doing? Can you teach me? So can you teach me? I had to come up with a trading strategy specific for a 9-year-old. Okay, simple, safe, predictable, consistent, no way for her to lose, all in less than 10 minutes a day. That's it. That's where the 10-minute trading strategy came from. If you take a look in the history, you go back and look. The very first videos, the very first mention of the 10-minute trader was like almost 15 years ago. And there are videos going all the way back to 2011 where we were doing this. Anyway, History. Oh, so 2.8%. Let's save this one. Let's get back to that question in a minute. Hold on. I'm not ignoring the question. It's going to take me a while to get to it. All right. So we're going to save this. 2.8. Of course we are. But you got to remember, do I like this company? Well, now that's not good. Okay, let's try it again. Gonna try it again, see, get it to work. Uh-oh. Offline mode. Enjoy. Yay, of course I will. Let's get this baby rolling. Uh-oh. That's not what I wanted. All right, well, let's write it down anyway. I have to save it again. All right, let's give this one a try. Is she popping up? Saved, covered board, untitled. There it is. Okay. Come on. I hate it when it does that. I hate it when it does that. Modern technology is not always that glamorous. Okay, here we go. There it is right there. By one covered call, UNH, 6 February 26. The 295 call option. Here's the profit, 824. Here's the investment, 2,800. Now, the way I like to look at it, I'm not buying stocks, I'm not buying shares, I'm not investing in the stock market. I am creating weekly cash flowing assets. So if I buy 500 shares of this company, I have 5 contracts that I can trade every single week. And that's what I'm looking for. People think you need to have the stock and the stock has to go up. No, you just need to own the stock. The price doesn't really matter as long as you have an income coming in my opinion. Let me say that because some people get offended when I say certain things. But besides the point, however many contracts I have, I can sell it in the money, at the money, out of the money, and that will give me some income every single week, and that's what I'm looking for. I got 5 simple rules. Rule number 1, never buy something you do not want to hold long term. Rule number 2, never sell at a loss. It defeats the purpose of the game, and yes, it is a game. Rule number 3, make sure the company is consistently profitable. No, it just doesn't make sense to me why people invest in companies that don't have a proven track record. I understand it, for the younger folks that are more risk adverse, which means they don't mind taking those kind of risks. Great, good for you. I hope you make a lot of money. Awesome, wonderful, seriously. But I'm at the point in my life where my trading is a little bit different. I have 2 criteria: consistency of profitability and preservation of my capital, which means I don't want to take unnecessary risks. And I really honestly, and I don't know how to say this to portray to you guys, I really honestly don't care about the next best thing. Hey, what's happening?
How you doing?
I'm doing wonderful, and how are you?
You wearing a Leaf jersey? Oh, you're the last person I thought would wear a Leaf jersey.
It's not a Leaf jersey.
What happened today? He said it was pretty good.
Okay, wait a second. You're talking to someone, not me, so I don't know who you're talking to. Kevin. Kevin.
What was it? I don't get it.
All right.
What is it exactly?
Okay, see, I got to get Kevin on the line here. Okay, hold on. Participants, there we go. There we go. Sorry about that. Kevin was talking loud in the background. One of the few people who gets to actually interact live. All right, so 2.8%. As I was saying, I'm creating weekly cash flowing assets. My main concern is, are they consistently profitable? Do I have something that I can buy and sell regardless of the current stock price? So at the money is the highest rate of return you're going to get. One strike in the money is safer but less profitability. One strike out of the money is more profitable, but the stock actually has to move. So it's really not that difficult to figure it out. It was created for a 9-year-old, and trust me, if a 9-year-old can understand it within 15 minutes, I'm pretty sure you guys should be able to have no problem. And if you do have questions, just ask. That's it. Matthew 24, written over 2,000 years ago. Ask and you shall receive. Well, let's take a look. So we're keeping this one. It's 2.8%. So I like 2.8%. 2.8. And yes, that's just for 1 week. Imagine that. If you can find good trades every single week, 1% or more, that's over 50% per year. Now, I already got the list of stocks that I look at. Dividend Kings, 5 decades of consistent profits. Dividend Aristocrats, 25 years of increased profits. Dividend Champions, 25 years of increased profits. Yeah, the Aristocrats and the Champions both have a quarter of a century, but the rules are a little bit different between the two categories. Number 4, the Dividend Contenders, 10 to 24 years of increased profits. Those are the companies that I want to look at. Oh, wait a second. Anything on Warren's list? Okay, find a good trader, someone you trust, someone you know has a good historical performance, someone whose past performance is something you emulate, something you look up to. Okay, so if it is a good company, if you want to put your money into it, well, you do what you think is best. I'm just showing you what I'm doing. Okay, I'm looking for a simple, safe, predictable, consistent 1% per week. That's my goal. You got to figure out what your goal is, and you got to figure out all the kind of nice, neat, fun stuff. So we're saving this one. Next, what else do we have next? Hold on. All right, so let me read some of these questions down here before we keep progressing. What questions do we have? John, we'll take a look at ISRG. Didn't we look at that last night, John? ISRG. Hold tight for a second. ISRG. Okay, yeah, this baby's dropping, John. You see this? So if you really like it, I'd sit and wait and find a bottom. It ain't here yet. It's still dropping. Pace yourself. Don't be in a hurry. What is the rule for picking? Uh-oh, wait a second. Okay, UNH, vertical spreads. Yeah, we talked about that. Okay, encourage your viewers to share your live and invite more friends. Oh, no, don't do that. We have enough people here. It's hard enough to cover all these questions. Last thing we need is more people coming here. Anyway, Vino, good to see you. Thank you there, Mr. Vino. Okay, what is the rule for picking the stock for a covered call? Oh, that's easy. The rule for picking the stock for a covered call is, for me, you got to figure out your own. Thank you, Matthew. All righty. The rule for me is, are they consistently profitable and do they have weekly options? Now, when I say consistently profitable, I'm talking about 2 decades. Thank you, Sam. Woohoo! Yay. 2 decades of increased profits. 2 decades. That's 20 years. Okay, so there is about 300 companies that fit that description. Okay, Vino. What do you think about Affirm for next week at 66? I have no idea. Let's check it out. AFRM. Affirm Holdings. Oh boy. Now, my assumption is you want me to give you a yes or no whether you think it's going to hit 66 and turn around. I can't tell you that. I don't know the future. I look at statistics. I look at facts. I love facts. I love statistics. Okay, Vino? So, the high is here at 100. The bottom's here at 30. Okay? She started out at 55, jumped up to 80, dropped to 30, shot up to 100. Okay, back down, back up, back down. Now she's dropping. Where she stops, nobody knows. Okay, here's the last 30 days. Okay, 76, jumps up to 84. Now she's down at 65. Where the bottom is, nobody knows. Just keep your eye on it. It will eventually turn around. Because at some point, someone's going to say, wait a minute, a firm at 60 bucks? That's a deal. How many people looking at a firm? Well, today, there was 6.7 million shares traded. That's enough. All right. Lisa, Kevin, I'm not quite sure what that means, but okay. Dale Frybird, what's my longest bag hold? 18 months. And that was Walgreens. Okay, because last year and the year before, Walgreens gave 1, 2, 3% every single week for 18 months. It was literally crazy. I never seen anything like it before. 18 months. Every single month, it was every single week, it was 1 or 2%. Every single week last year and the year before. So that was the longest I've ever held anything. KB, Len, thank you, Len. Dale Frybird, AGQ. What the heck is that? AGQ. Pro Shares Ultra Silver ETF. Hell no. I don't buy anything at the high. Okay? I don't buy anything at the high. Sorry. Jennifer, thank you. Guy Root, how are you? Okay, Cupid, yes, it has been a while. After a drop, it 1 to 3 days to the upside. Absolutely. No. Okay, I say 2 days to the upside. On the third day, I will jump in. Gold will fade in a couple of months. Yeah, probably will. Check out the yield, though. Okay, Dale, you seem to misunderstand something. I honestly don't care about the yield. Really, I honestly don't. Okay? It was at, what, 40 bucks a year ago. Now it's at 400. That's a 10x increase. Oh, great. Wonderful. I don't buy at the high. I don't care what it is. And I don't understand if you don't understand that. I don't know what to say in order for you to understand that I honestly don't care about the yield. I don't care about anything. I don't buy anything at the high of the year. I don't care what it is. Okay, happy times. All right, Vino, happy times. ELDN, what is that? ELDN. Eldon Pharmaceuticals. No, I don't do monthlies. I see that, Matthew. Thank you. Okay, I don't do monthlies. They just don't work out for me. Happy times. ELDN. No. Okay, I don't do monthly options. Okay, rule 1 is never buy something you don't understand. If you don't understand that it's a monthly option, not a weekly, then you probably shouldn't be buying it. And that's not advice, it's not a tip, it's not anything. It's just an observation. Diefield, I understand, I'm joking. Okay. Thoughts on penny stock? I don't do penny stock at all. I only do companies that have 2 decades or more of increased profits. That means they have to have dividends that increase consistently for 2 decades. Okay, what will you do if the stock drops more than 10% after you buy the covered call? What do you mean, what will I do? I look at what I look at every time I buy a stock. What did I buy it for? What option did I sell? Where is it at now? Where does it look like it's going? And what's the safest trade at this possible moment? It's all A, B, C, 1, 2, 3. Okay, if I bought it for this price and it drops, great. Well, I still have the contracts and I can still sell the contracts based on what did I buy it for, where's it at now, where's that risk reward going. Your longest hold wasn't because of share price downdraw? Absolutely not. My longest hold was because they kept giving me more than 1% every single week. So if I buy the stock, let me get to a good one. Okay. If I buy the stock at 20.02, I'm going to sell the 20, and the 20 is going for 53. That's over 2% for 1 week. So when Friday comes, I will take a look at where is the stock, where does it look like it's going, how do I correlate it to which option I'm going to sell, in the money, at the money, or out of the money, what is it going to give me? So Walgreens gave more than 1% every single week for almost 18 months. And then they finally got bought out, and then the new market maker's just giving it crap, so we don't even buy it anymore. Seems like drawdown and assignment risk on the upside will eat your 1% per week. Only if you sell it for less than what you paid for it. Remember rule number 2. No. I understand what you're saying, okay? It sounds like you're ignoring the share price return. I am, because I don't care about the share price or the share price return. Okay, you keep missing what I'm trying to say, Dale. Okay, so let's go back. Let's back up for a second. Okay, let's back up for just a second. Let's say, hypothetically, I buy 1,000 shares at 24. Okay, 1,000 shares at 24, that gives me 10 contracts. So I can sell 10 contracts. Now, let's say, hypothetically, that the stock went from 24 all the way down to 10. Okay, that's more than a 55% decrease in price. What didn't change? What didn't change is the fact that I still have 10 contracts. So regardless of the price of the stock, it's the amount of stocks I have, the amount of shares in correlation to the contracts in which I can sell. So when you're selling options, you got 3 choices: in the money, at the money, or out of the money. So wherever I jumped in, if I jumped in at 24 and now it's down at 10, I'm going to want to go 3 to 4 strikes out of the money. Now, what is 3 to 4 strikes out of the money paying? Maybe it might not pay 1%. Maybe it might pay a half. Maybe it pay 3/4. But what I'm looking for is consistency of profitability and consistency of cash flow. Okay, now you got the dividend kings. 5 decades. Now 5 decades is 50 years of increased profits. Regardless of what their share price is, their dividends increase year after year after year after year. Now most people usually buy stocks to hold for years, decades, long term, and just collect the dividends. Well, this is just a little bit of twist on that. We're still buying stocks with the intention of holding them long term, but if they just so happen to hit my target price and give me a profit early, I'm more than willing to take it. But what I'm not willing to do is to take a loss. So if I did buy at 24 and it is at 10, I have no intention on selling, and it's not a loss until I agree to take it. So if I never, ever, 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 ever sell at a loss, it's not a loss. And every dividend I collect and every premium I collect is cash flow. So it all depends on how you're looking at it. You're really over and explain it. You don't have to end up holding them for a year or more to avoid a loss. Avoiding a loss is simple. Never sell for less than what you paid for it. Assignment risk would force you to sell below. No. The assignment risk, you are going to take into consideration the strike price as opposed to what the person paid for the option and what the break-even rate's going to be. So at this moment in time, 20.02, well, the $20 call option for this week is valued at 36 cents a share. But if I want to sell it, it's valued at 29 cents a share. Well, what was it worth on Monday? What was it worth last week? And what's the difference between the two? So there's a lot of things you can do avoiding the opportunities of taking a loss. Okay? Can I just leave my money where I put it? I'm new at this. Okay, ML Kells, hey, you can do it anything you want. I'm just explaining what I do for a 1% return on a weekly basis. That's it. Okay. Look at the peak to peak of your favorite stocks and say that. A lot of them are 4 years or more. Okay, you're under the impression that I'm holding for 4 years or more. The longest I've ever held anything is 18 months. And before that, it was 9 months. I have no desire whatsoever to hold anything. And very rarely, as a matter of fact, I think last year I had 4 losses. Okay, over 3,500 trades. 3,500 trades, I only lost 4 times. That's a remarkable part. Yeah, thank you. No matter how hard I try to explain, wifey don't get it. Tell her it's like girl math. Okay, now girls don't get offended by this, but some of you may do this and some of you may know someone who does it. Girl math, doc. Okay? You go out and you buy yourself a nice pair of shoes, a nice dress, a nice outfit, and you leave the price tag on it. And then you wear it out, get your picture taken, blah, blah, blah. And then you go home and you return it the next day and get your money back. That's girl math. It's the same thing. Okay, you're buying something, you're getting some kind of consideration for it, and then you're getting all your money back. Same thing. Even JP Morgan and McDonald's have had major drawdowns. I'm aware of that. Michael Banks, what is your thought on round hill weekly pay ETFs like HOOW and MSTW? Well, let's take a look. HOOW. All right, my opinion, right off the top of my head, I don't do monthlies. That's it. Top of my head, I don't do monthlies. They just don't pay the same. Okay, MSTW. Again, I don't do monthlies. They're just not for me. Okay, Dale. Right. You started this strategy well after we have seen any market volatility. Okay, I appreciate that, Dale. But what you're missing, Dale, well, hold on a second. I think I need to bring this up. Think I might need to bring this up. Let's take a look at some fun stuff. Uh-oh, refresh. Uh-oh, gotta refresh the page. All righty. All righty, Mr. Dale, are you ready? Check this out. Starting date, August 31, 2011. My very first blog post doing this strategy was August 31st, 2011. You can go into the history of all the trades I've ever done. I save each and every one of them. Okay, what it shows you are my buys and my sells. Look here, April 19th, 2012. It was another slow week, but still moving forward. Our profit this year so far is 34%, or 2.66% for the week. It's not that I'm new at this, Dale. I've been doing this for a long time. You're only just seeing it because you're only just seeing it. Okay, so I've been doing it for a long time. I know what I'm doing, and you never ever take a loss unless you agree to sell it for less than you paid for it. All the dividends and all the premiums are cash flow coming in, and that is what I'm looking for. Simple, safe, predictable, consistent 1% per week. Let's get back to where we were. Okay, give me something else. Jeff, if the stock drops a lot, just go with a further expiration date so I don't have to worry about rolling. I'm going to agree with you there too, Jeff. You can do that if you want, but that takes away from weekly cash flow if that's something you're concerned about. But that's what I'm looking for. Okay, you might want to go further out, 2 weeks, 3 weeks, 4 weeks. There's nothing wrong with that at all, as long as you find something that's comfortable and understandable for you. Understand? So as long as you understand it, as long as you're okay with it, perfect. That's all we're looking for. Carmen, how are you doing, Carmen? Dude, you are mirrored, so it's really hard to read what is on your screen. Dude, I'm sorry. It's a YouTube thing, not a me. It's the selfie camera on an iPhone. Okay, if you reverse it, that means I don't get to talk to you. So do you want to see things normally or do you want me to answer your questions? Because the situation with the iPhone and YouTube, you can't have both. Okay, bullish or bearish on Oracle? Dan, hold 1 second. Len, you do cash secured puts and covered calls. Okay, Len, I do a lot of things, but the only thing I do here at night that I give away to you for free is the covered calls, specifically the strategy I created for my 9-year-old daughter. That's the only thing I give away for free. Simple, safe, predictable, consistent, no way to lose if you do it right. Simple 5 rules. Number 1, never buy something you don't want to hold on to long term. Number 2, never sell at a loss. It defeats the purpose of the game. Number 3, make sure the company's consistently profitable. That's a you thing. You got to figure out which companies you like, which ones you don't. Number 4, for me, it's weekly options only. And number 5, make sure the numbers work. And what I mean by the numbers is, what am I buying it for? What strike price am I selling? Is it giving me 1% or more for this 1 week? That's it. It's a very simple strategy. It took my 9-year-old 15 minutes to understand the whole thing. Then again, she didn't have, 3 million questions thrown at her. Just give me stocks. Pablo, how are you today? All right, let's go back. Thank you, Dan. Omar Ronnie, how are you? All right. Hey, FL Hockey, back in the house. How are you? Sam, we already looked at UNH. Cool, you have a 9-year-old. No. Back in 2008, she was 9 years old. Now she's 26. Hockey dude, what's going on? Matthew. I just became a super fan. Woohoo! Classic car guy. What's the best car you ever had? Mine was mine was 2 of them. A 39 Pontiac Woody and a 37 Oakland. Yeah, those are my 2 favorites. MC, how you doing? Sent gold boxing gloves. Woohoo! All right, what's up with KDP? Well, let's check it out. KDP. Who came up with that one? CR. KDP. February, March, April, June, July, September, December. Those are months of the year. That is what is called a monthly optionable stock. That's going to be a no. I don't do monthly options. They just don't work for me. Bob, 2015 Subaru Outback. Wrong place, dude. I know you don't buy at the peak, so what price chart are you looking for? I look at the 1-year chart, the 90-day chart, the 30-day chart, and then I look at the seasonality chart. Every picture tells a story. Okay, what am I looking for? 5 things. The high, the low, where was it? Where is it? What direction is it flowing? They're all simple moves. Complications only satisfies your ego. Make it simple. Any thoughts on silver? Yeah, silver's supposed to go into the 300s. Okay. Jeff, what percentage of portfolio are comfortable with per trade since only trade well-established companies? Okay. What percentage? Okay, I got to read that one again. What percentage of portfolio are comfortable? Oh, my whole portfolio is nothing but dividend-paying stocks. Okay, I don't have anything else. Okay, that's it. Everything I own is weekly cash-producing assets. Len, I assume you don't do crypto, right? No, I don't. However, Len, I do have my own crypto that we're working on. Okay? Yep. I have my own crypto, which means it allows me to get my money out of the US government system, out of their fingers, and then I have it myself. And then I control that money. I'm weird that way. Any thoughts on dividends? I love dividends. I use dividends to tell me if the company is consistently profitable or not. What's it called? It's buyable. I'll inform you on it in a little bit, but not at the moment. That's not what we're here for. Silver, crypto, S block. Do you have an S block? What is an S block? S B L O C. That's not a stock symbol, dude. Okay, back here. What's up with KDP? We don't do monthlies. We just did that. Can you explain a contract? Oh, J. LeBlanc. A contract is basically agreement between two parties. You agree to buy, I agree to sell. It takes 4 items inside a contract to make it legal and binding. 1 is a beginning date. 2 is an ending date. 3 is consideration, also known as money or handshake, piece of pie, whatever you consider to be consideration. And 4th, the most important one, it is called meeting of the minds, or better yet, an agreement. I agree to sell, you agree to buy. I agree what price, you agree yes, you know. So it's all in agreement. So what here we're doing is doing contracts on stock. So it's the same exact thing. So I personally, I am going to buy the stock, okay, and then I sell to you under a contract. You're going to buy it from me at a certain price by a certain date, and you give me money. So you have all 4 things. The beginning date, when you buy the contract. The ending date, when it expires. The consideration, the money that you pay. And then 4th, the meeting of the minds. Means you're going to buy it at this price by this date. That's it. That's a contract when it comes to stocks and options. Actually, a contract with anything. You need 4 things. Take the premium collected and buy additional shares of what dividend aristocrat you were just in. You could do that, but if you do that, you're going to have uneven shares. So hypothetically speaking, if I do Macy's and I get 1,000 shares, that's 10 contracts. And let's say the dividends are a couple of $100. Well, those couple of $100 going to buy more shares. Now I'm going to have shares that don't have 100, and I can't really do anything with them. So everything I do is geared to hundreds of shares. So the DRIP, dividend reinvestment plan, doesn't really work for me because onesies, twosies, I can't really use them as leverage to sell. But I get what you're coming at. Passport Eric, what is it called again when you buy the stock and sell the call at the same time? A covered call. Buying the stock, selling the option at the same time is called buying a covered call. Oh. Madman Tacoma. Okay, he gets it. Luis, how are you? Matthew, thank you. PLTR took a big dip today. Well, I don't do PLTR, okay, only because PLTR doesn't have any dividends. So without dividends, how do you know if the company's profitable or not, and when is the right time to buy it? Now, the reason why I use dividend stocks, well, once I show you, you'll be able to understand. You say, oh, yeah, I get it. Okay, this right here is called an EX dividend calendar. It tells me when all the stock companies that I like are getting ready to pay a dividend. Why is that important? Well, it's important because the little dot you see here is considered as the EX date, the last day the stock trades before the dividend is paid out. So why is that important? Well, it's important because just before this date, the stock has a tendency to go up in value. So when the stock goes up in value, a simple, safe strategy will allow me to get 1% every week. So I look at the calendar and says, all right, these are the stocks I'm looking at this week. Only these. I'm not looking at those, I'm not looking at those, I'm not looking at those. Because I'm looking for an advantage. And the advantage with dividend stocks is they move up in value just before the dividend. And once they get the dividend paid, then they have a tendency to go down. So I don't really want to collect the dividend. I want to buy before the dividend when the chart tells me it's the right time. It's the timing. Okay, get a 30-day high, 30-day bottom, bounces up. That's where I want to jump in. So these are the only stocks I look at. Okay, the first week in January, let's take a look. General Electric, John Deere, Illinois Tool Works, Annalee Bank, American Express, Bristol Myers Squibb, Cisco. You probably heard of most of those companies. All right, Madman Tacoma, Verizon. Let's take a look. So that's why I do dividend stocks, and that's why dividends are important to me. Not that I want to collect the dividends. I just use them to tell me when the right time to buy is. Okay, next on the list was Verizon. We looked at this last night, and it looked pretty good last night. Can't really tell at the moment. All right, Texas. We already said no to PLTR. Spicoli, no to Enbridge. Enbridge doesn't have dividends either. Sorry, Spicoli. So here's Verizon. What do you think? Top, bottom, now she's going up. Slowly, I might add, but still going up. It's at 39.41. The 39.50s are going for 76 cents. Okay, that's a little bit less than 2%. But do you like Verizon? Let's take a better look at it. Okay, covered call. And we want to do the 39s right there. Just one contract. Okay, and here it is. Here's the order right here. You ready? Buy one covered call, Verizon. 6 February 26th. That's this, not this coming Friday, but next Friday. The $39 call option. Profit is 71. The investment is 3,800. Well, let's find out what rate of return that is. Calculator. 71 profit divided by the investment, 38.29, comes to a grand total of 1.8%. If, and only if, you actually like Verizon. Remember rule number 1? Never buy something you don't want to own or you don't understand. Spicoli. Give me a second, I'll take a look at that. So we're going to save this one. We're going to save us some Verizon. And what do you got, 1.85? There it is. There she be. Buy one covered call, Verizon. 6 February 26th. That's this next Friday. Not this Friday, next Friday. 39 call option. 71 is the profit. 38 is the investment. Look at this. The stock is currently at 39.41. So all the stock has to do is just stay exactly where it is. Okay? Because if it goes higher, we make our money. If it stays exactly where it is, we make our money. It could even drop all the way down to the break even of 38.29 and we'll still have some profits. So it's always going to come back to, do I like the company? Does it make sense? Is this something I want to put my hard-earned money into? Jay Lee, how are you doing today? Okay. Does it make sense? So Spicoli, Enbridge has dividends. ENB, Enbridge. Let's find out what they look like. Haggis Herb, ET, no. Energy Transfer, the numbers are just horrible. I'll show you in a minute. We're time having issues with the internet. Issues. Okay, while that's loading, let's take a look at, what was that one? Santos, okay, Uplifting Land Empire. Oh, Clorox, sit tight. We'll take a look at that in a second. Let's get out of this, get out of that, get out of that, get out of this, get out of that, get right over to here. First, EQT, never heard of it. What is EQT? EQT. EQT Corporation, never heard of it. Interesting. Look at the last 30 days. Whoops. I gotta save this one. I hate it when it does that. 1.85. Okay, so what are we looking at? EQT. Never heard of them. Oh, I can't show you until this thing finishes. $1.8. Now let's look at EQT. Okay, the high, the low, where was it? Where is it? Down, up, down. Sorry, Santos. Okay, it was down here at 49. It jumped up to 57. So 49 to 57 is $8. Okay, that is less. That's almost 20%. Okay, from 49 bottom to 57 top. Yeah, almost a 50% increase. No, not 50%, 20% increase. Almost. So yeah, now it's gonna have profit taking. Now it's gonna come back. That's the way it looks. Is that guaranteed? No. It's just a shot in the dark because that's what it looks like. Did Inbridge fill? Nope. Having issues. Upliftland Empire. Clorox. Isn't Clorox a monthly? It is. Okay. I don't do monthlies. February, March, April, July, January 27, January 28. Yeah, I don't do monthlies. The numbers just don't work in my favor, so I don't even bother with them. So Haggis, ET. I'm going to tell you why I don't like ET. Okay, it's got nothing to do with the chart whatsoever. Okay, nothing to do with the chart. The reason I don't like it, one strike out of the money, it's less than 0.5, less than 0.5%. Two strikes out of the money, it's 2 cents. Three strikes out of the money, 0.000. So I only like to do stocks that have 4 to 5 strikes out of the money, that have some money there. I like to stay away from the zeros, because if the stock drops, I have to sell an out of the money option. And I like to go 3 to 4 strikes out of the money, just so I have cash flow coming in. How you like Tesla after earnings? I don't do Tesla at all. Okay, 9 lives edge. I don't do Tesla. It has no dividends. It's hard to decide when it's going to move. There's no predictability to it. And without predictability, how can you be profitable? Okay, I don't just make a shot in the dark. I don't do that. I like consistency, profitability, historical performance. E and B is quarterly. No, most dividend stocks pay quarterly, but how many years are they consistently profitable was the question. And I'm having issues with this. Damn it. Anyway. All right, next. What about Moat? Never heard of them. MOOAT. Okay, I don't do monthlies. February, March, June, September. No monthlies. No monthlies. Never. Rule 1, never buy something you don't understand. So if you don't understand Moat, why do you have me doing your work for you? Okay, if you like Moat, you should know that it has monthly options, not weeklies. FOD. Hey, Ron Smith, how are you? Hey, Boat Doc Docs, what's going on? Yeah, Madman, no to ET. I'm going to agree with Johnny. IWM. What is IWM? iShares Russell ETF. I don't do dailies. Okay, I like normal companies. Normal. With profitability. It's a BlackRock. Okay, February 6th. 262. The 262 is going for $4. But still, it's at the high. I don't like things at the high. So wait for it to pull on back. Michael, this is incredibly interesting. Do you have a structured course? I'm working on it. Michael, ExxonMobil, you say. XOM. Hell no. Michael, did you not just hear me say I don't buy anything at the high of the year? Why are you showing me ExxonMobil? Len, CVX, Chevron. Come on, guys. I don't buy at the high of the year. Why are you showing me stuff at the high of the year? It just doesn't make any sense. James, Petrovitas. ONDS. ONDS. Interesting. I'm going to say no to this only because, James, I'm saying no to this only because it was $1 a year ago. So if it is $1 a year ago, where's the 20 years of increased profits? Okay, you're forgetting that part. Okay, I'm not looking for this. As great as that is, buy a stock for $1, now it jumps up to 15. That's awesome. It really is. But it's not consistent, it's not predictable, has no historical performance whatsoever. SoFi does not have historically increasing dividends. It doesn't. Sorry. So hopefully that makes sense, James. Do this, AGI. What is AGI? AGI. Alamos Gold. Really? Come on. Michael, I don't do monthlies and I don't do the high of the year. When I say rule number 1 is never buy something you don't understand and you don't want to own. Well, if you understood it and you know what it's doing, you would know that it's a monthly and you would know that it's at the high of the year. There's no buying opportunity there, at least not for me. What about Microsoft? I like Microsoft. MSFT. Okay. Now, Microsoft, as much as I like it, it's going to be a no also. Because look at that big jump it just did. Look at your last 30 days. Okay, 30-day high, 490. It drops down to 440. Then from 440, it jumps up to 480. Okay, so 440 to 480 is $40, which is 10%. Okay, the bottom is here. Today, that's a 10% jump in, what is that, 4 days, 5 days? 1, 2, 3, 4, 5. A 10% jump in 5 days. That means we missed the boat. New here, what's your criteria? 9 lives, my criteria is simple. Consistency of profitability, that's 2 decades of consistent profits. And weekly options, that's it, that's my criteria. Oh, you meant AIG. Oh, well, that makes sense. AIG. Okay, now this is interesting. Now, the reason I say this is interesting, look at the top here. Big drop, and now there's the bounce. You got that gap right there. This baby's going sideways. That gap is going to fill, so this baby's going to come up. Let's zoom in a little closer. But before we do, let's see, is it going to be a profitable situation? What am I buying it for? $73.39. What's the closest strike price? 73. It's paying $1. Well, that's more than 1%. So let's take a gander at it. And then ask yourself that question. Do I like AIG? Do I like AIG at this current price? Two totally separate questions. You may like the company, you just might not like the current price it's at. Okay. Here's our last 30 days. Check this out. 30 days ago, here's the big drop. Okay? 2 days to the upside. Today, I'm looking for one more day up. It could be tomorrow. It could be Monday. Here's your bottom right there. Friday. Monday was higher. Tuesday was higher. Today it was just sideways. So if you really like AIG, okay, if you like it and it makes sense to you, why not? Well, let's take a look. AIG is going for 73.65. So let's do the 74s. It's the closest strike price. One contract. Market. Here we go. Buy one covered call, AIG, 6 February. That's next Friday's option. The $74 call option against the stock AIG. Here's my profit, 153. Well, here's my investment. So this weekly cash flowing asset is costing me $7,200. Well, what's my weekly rate of return? Now, the interesting thing about this weekly cash flowing asset, as opposed to, let's say, a candy machine, okay, a gumball machine, what do you call those thingies? Soda machine, a vending machine. Same thing. Okay, you're outlaying a certain amount of money, and then every week you get a rate of return. PayPal doesn't have dividends. Sorry, Len. So what my outlay is in this situation, $7,200, was it giving me in return? And what's the ability of it consistently giving me something in return? Okay, so 153 divided by 7,247. Well, that's a grand total of 2.11% for 1 week. Now, we know that 1% a week is 50% a year. 2% a week is over 100% a year. Now, are you going to get 2% every single week? Probably not. I've been doing this for a very long time. My average is only 1.4% every week. That's my average. Now, some weeks I make a lot more, some weeks I make a little bit less, but my average is 1.4. And I'm perfectly okay with it because it takes me less than 10 minutes a day to trade my own money. That being said, we're going to save this one, 211. 1 Adam 12, we got a 211 in progress. Proceed with caution. Police on scene. Who remembers that show? 1 Adam 12. 1 Adam 12, we got a 211 in progress. 211. Okay, anyway, here we go. And there it is. Buy one covered call AIG, 6 February. $74 call option against the AIG stock. Look at 153 is the profit, 7,200 is the investment. 2.11% for 1 week. $2.1, yay! 2.1, yay! All right, what's next? All right, we did ONDS, we did ExxonMobil. PayPal doesn't have dividends. Len, what's the best way to find good stocks? Google, Dividend King, Dividend Aristocrat, Dividend Champion, Dividend Contender, anything on Warren's list. Hey, Passport Eric, I watched What Adam 12 being filmed in LA as a kid. Cool beans. Okay, so Len, Google, Dividend Kings list, 2026. Dividend Aristocrats list, 2026. That's how you find good quality stocks. Somebody already did the work for you. Believe it or not, there's somebody somewhere in the background compiling a list of every single company and all the statistics. So whatever statistic you're looking for, there's probably some financial guru crunching numbers willing to give you that information. So go to Google, Dividend Kings List 2026, and then hit the search, and boom, it pops up. And it gives you every single one of the dividend kings, every single one of the dividend aristocrats, so on and so forth. Okay, let's get out of this. Out of that, back to here and back to there. Alrighty. Next. Honey, how are you today? Austin's in the house. Wow, I missed all these questions. Uh-oh. Wow, I missed all these questions. Uh-oh. Okay, got that. I caught up now. Yay, where are we? All right. Collect premium and dividends. Dark Knight, I'm looking for specifically the premiums. The dividends is kind of like a bonus, not what I'm looking for, but every once in a while it throws in there. Passport, you watch, okay. Michael, the Kings are all high, and you said do not buy them. Now, what? Yeah, I get that, Michael. You have to find out the entry price for you. For me, I look for a 30-day high, 30-day bottom, and I look at the bounce off of that. Let me show you. Let's take a look at this, Michael, shall we? Are you ready? All right, last year, we were right here at 76. She shot up to 88, dropped back down to 76, shot up to 85, dropped down to 76, shot up to 84, dropped down to 76, shot up to 84, dropped down to 76, shot up to 87, dropped down to 71, and now we're here at 73. That's what it's done this past year. So how do we know if it's a good opportunity to jump in? You get the high at 88 and you get the low at 71. So let's zoom in, look at the last 30 days. Well, the last 30 days looks like this. 30-day high, 30-day bottom. That's where it was. This is where it is. Okay, down, up, down, up. Right now, we're just kind of like going sideways. So, do you like AIG at what it's doing? Going sideways with a little bit of an up tilt. Okay, I always look at what is the chart telling me? Where's the 30-day high? Where's the 30-day low? Where does it look like it's going now? Now, it's not guaranteed. Just because it looks like it's coming down and going back up, that's not guaranteed. It just looks that way. Now, if the company has increased dividends, great. They're consistently profitable. That works for me. So now I have two things in my favor. Okay, it's dropped, now it's bouncing up, and it has over 5 decades of increased profits. That means more than likely, next year they're going to make more money. The year after that, it's going to make more money. Okay, Passport Eric, do you repeat the weekly contracts on the same stocks or pick new ones week based on EX date? That's 100% correct. I base everything on the calendar because the calendar tells me exactly when a company is going to pay a dividend. And if stocks have a tendency to go up just before the dividend, then I have a calendar that tells me when to buy what. That's all it tells me. It tells me when to look at it. Well, then I got to look at the chart. Down, up. Well, that works for me. And the dividends coming up. Those are two things in my favor. Well, now I want to do a safe, predictable trade that also puts it in my favor, as long as it's over 1% every week. What's the top third of my portfolio look like? It looks pretty much like what it looked like last year and the year before. Elliot, we already did AT&T. Michael, but ExxonMobil is going up. Can I buy? Michael, you can do whatever you want. Oops, let me pull it up. Okay, Michael, you're 100% right. Okay, the bottom of the year was at 98, sideways. Now she's at 137. She's going up nicely. You can buy it if you like, but take a look at the facts. Facts are what facts are. Here's the bottom, 118. Here's the top, 138. Okay, did you see that, Michael? The bottom is 118 and the top is 138. That's just the last couple of weeks. That is a 20% increase. Okay? What usually happens at a 20% increase? Usually there's profit taking. Something jumps up 20% and you don't take your profits. Well, here's the thing about profits. They're kind of fickle. Number one, it's not a profit until you take it. That's number one. Number two, nobody ever went broke taking profits.
I'm so worried.
Okay? Nobody ever went broke taking profits, and profit is not a profit until you take it. And no matter what you do, Michael, okay, whether you buy it, you had a 50-50 shot. It going up, you're a prince, you're the king, you're right, you're awesome, wonderful. Okay? Profit taking, it goes down. Now you're a dunce, you're a turd, you're in the doghouse. It's a 50-50 shot no matter which way you look at it. It's either going to go up or it's going to go down. Okay, Len, we already did Verizon. Vincent, Delta Airlines. Let's check it out. DAL. All right, so Vincent, check this out. 30-day high, or the high of the year, was a couple of weeks ago. Now we got profit taking. Let's zoom in. Check it out. Here's the 30-day high, 73. Now she dropped down to 65. Okay, bottom was yesterday. Today is a little bit higher than yesterday. Okay, so what we're looking for is consistency of profitability and the right time to buy. 30-day top, 30-day bottom. Now today could be the beginning of the turnaround. Okay, because you went from 73 to 65. That's $8. That's more than 12% decrease. So you got a 12% decrease, and today is one day to the upside. So if you really like it, Delta Airlines, give it a day or two. We got one day up, which is today. So tomorrow, Friday, Monday, so maybe Tuesday for me. It's if tomorrow is higher and Monday's higher. JB 2101, Pfizer, PFE. All right, we're going to take a break for a second. Okay, grab my seat and answer some questions. Okay, just sit tight. Dude, you're all right. We got that one. It's a channel thing. Okay, are you a millionaire? Wallace, how are you today? What are your thoughts on Merck? Ooh, Merck, MRK, MRK. Merck is coming down at the moment from the looks of it. So me personally, I'd sit and wait for it to turn around because that's what stocks do. Okay, 30 days ago, you're here. Shot up, profit taking. Now at the bottom, it'll turn around, go back up again as soon as the bottom appears. Well, at this moment, it's still dropping. Profit taking is still taking place. So you just got to wait for it to turn around. Port Company is a good investment. Lek, never heard of it. PORT. I'm going to say not for me. Okay, you may think it's a good investment, but not for me. Dude, anything that looks like that and it has no options, no thank you. All right. What do we have next? Lek, I invest gold, silver, copper, iron, lithium, and other rare metals, high demand. Okay. I have some gold and silver. I haven't seen anybody coming to drop off money for me every single week. Okay, now unlike you, I'm not in that situation where I can put all my money into an asset and sell it once or twice a year and get, enough to live off of. I actually have to work for my money, which means my money has to work for me. So 1% every single week, it's currency, it's flowing, it's moving, it's not sitting dormant in gold, silver, copper, or oil. Those are all dust collectors. Okay, I don't know anybody that pays a weekly premium on any of those commodities. And they are commodities, they're not stocks. So we're here talking about stocks, specifically dividend stocks, and you're talking about commodities. Nothing wrong with it, Lek. Thanks for stopping by. You have a lot of patience with the technology. I would be losing my mind. Sorry, Carmen. I'll do what I can. Charlie, how you doing? Okay, Joseph, how about Relax for dividend options? RELX. Never heard of it. RELX. No, I don't do monthlies. Who came up with that one? Joseph, I don't do monthlies, only weeklies. Oh, glad I bought kgs of silver a few years ago. All right. Okay, Barry, thank you. I wonder how many people shorted gold. Don't know, don't care, it's not in my realm. My penny stock went to zero. I feel bad for you, I do. Nope, you're here, thank you. If you don't like it, just leave. Direct, right to the point. Way to go, Greg. Rule 1. No. Papa, rule 1 is never buy something you don't want to own long term. Rule 2 is never sell at a loss. Please be respectful. If you don't understand, ask questions. Thank you, Greg. The wealthy are smart, you would never know. The wealthy are smart, you would never know. I'm not quite sure what that means. It doesn't sound like a question. It sounds more like an insult, but thank you. Oh my gosh, I didn't realize that he got a moderator. Thank goodness. Yep, thank you, Charlie. Yeah, that's Greg, up, down. Thank you, up, down. Hey, Charlie, just trying to keep nice and keep the trolls out. I appreciate it, dude. I'm received because we had a lot of trolls. Relieved. Okay, thank you there. Hello, James. Carmen, thank you. I have an idea for those who don't like it being backwards. Buy yourself a big enough mirror in the front, and then that would work. Okay. There's always a solution to most problems. Yeah, there is. And if you know what it is, let us know. I have no problem whatsoever doing whatever I got to do to invert the screen. But nobody's come up with an answer so far. And no, it's not in the phone to reverse it. That doesn't work. And no, it's not on the receiver to nope, that doesn't work either. Okay, so I've tried a lot of things and a lot of them don't work. Soon free 81, Microsoft, MSFT. Didn't we look at Microsoft earlier? And didn't we say no to Microsoft? Okay, now the reason I said no to Microsoft because it's right here. Here's our 30-day bottom, 440. She just jumped up to 481. That's a 10% increase. Not only a 10% increase, 36 million shares traded today. So is that really something you want to jump into? Now, I'm not saying yes or no. I don't give advice and I don't give tips. But I don't buy anything if it had a 10% jump in the last week or so. It's not what I'm looking for. I'm looking for buying opportunity. And for me, a buying opportunity was a couple of days ago. Here's the top, here's the bottom. Right about there was my buying opportunity. 1 day up, 2 days up, third day I jump in. Okay, that was 3 days ago. That was last week. Let's keep going. Death Spawn, how are you? Matty Mates, right? The phone has a mirror app you can use. No, the phone doesn't have a mirror app you can use. Not on the face, what do they call it? Not on the selfie camera on the front of the camera. On the back of the camera, yeah, it has the mirroring opportunity. But then I wouldn't be able to answer your questions now, would I? Okay? So what do you prefer? To ask and answer questions, or to make sure that any irrelevant information I give you is helpful? Because it's all irrelevant. Because tomorrow, all these numbers are going to change. Tomorrow, that's either going to go up or it's going to go down. And nobody knows. We're just looking at where we are and how things look going forward. Okay? So, yeah, I know there's a mirroring app on the phone, but that's for the camera, not the selfie camera on the front. What I don't get is how the mirror effect works. Yep. Is an iPhone issue. Yep. What about bonds? What about bonds? Okay, we're talking about dividend stocks. Okay, that's all I'm talking about. Not necessarily it's the settings within the phone. Okay. SWKS. Isn't that Stanley Black & Decker? SWKS. Skyworks. Okay. No. Charlie, come on. I don't do monthlies, Charlie. No monthlies. Rule number 1, Charlie. Never buy something you don't know or you don't understand. If you understand it and you know what it is, you would know that it has monthly options. Okay, rule number 4 for me, no monthlies, weekly only. Death. What about metals like military grade to like silver, gold? I would like to learn more. Okay, so death spawn. I don't do commodities. All right, silver and gold are commodities. All right, I only do dividend stocks that have 2 decades of consistent profitability. Okay, I'm 62. The amount of money I have has to last me the rest of my life. So I don't do anything speculative. I don't do anything that has risk to it. Did a little digging on the mirror issue. Thank you. Apple, like the OBS Studio, Streamlabs, Zoom, Teams, blah, 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 have a mirror or flip horizontally option that's easy to leave on. Yeah, I know that. It still doesn't work. Anyway, let's keep on going. What is a safe harbor? And why are weekly picks better than monthly? As far as profits and investing, again, I'm learning a lot. Okay. Now, the reason I do monthlies as opposed to weeklies, I got to do this example almost every other day. But, for the sake of you, let's do it every other day. All right, so here we go. First thing I want to see always, always, always is the 1-year chart. Then I'm looking for 5 things. It takes me 3 to 4 seconds. That's it, 3 to 4 seconds. Ready? 1, the high. 2, the low. 3, where was it a year ago? 4, where is it now? 5, what is the motion? Down, up, down. That's it. 3 to 4 seconds. Now, this down part right here has piqued my interest because this is what's called bottom fishing, looking for a new bottom. Well, let's zoom into that. Okay, here's the last 30 days. This will show you exactly why I don't do monthly options. You ready? The high, the low, where was it? Where is it? Up, down, up, down. Okay, great, fine, dandy. Here we are. Watch closely. 30 days ago, we're at 64. We jump up to 68. We drop down to 59. Shoot up to 60. Drop to 56. Shoot up to 62. drop to 58, shoot up to 61, drop to 54. That's a lot of movement in 30 days. Now, tell me, where is it going to be in the next 30 days? Okay, this is 30 days of movement. Up, down, up, down, up, down, up, down. That's 30 days of movement. Great. 30 days ago, we were at 64. Now we're at 55. Now tell me, where do you think it's going to be in 30 days? Not that easy, is it? In 5 days, I would have the assumption it would be somewhere around here, between 55 and 57. Because when a big drop like that happens and a big gap down, it has a tendency to return and go back up. Well, that's easy for 5 days. Now let's look at the options. Stock price is 55.28. Okay, the closest strike price is going to be the 55, and it's paying 295. That's kind of a lot. Okay, but what rate of return is that? So we get the calculator out. Or is it 55? Oh, wait a second. Nope. It's currently at 57 after hours. Okay, so the 57 is going for 205. Well, let's find out. $205 divided by the price of the stock, 57.10. Okay, it's 3.5%. Well, how many weeks to the next option? Okay, well, from this option to this option is 51 days. So I'm getting 3.5% for 51 days. Now you got to divide 51 by 7 because that's how many weeks are in 51 days. And what is that? 6. So now we take 6, because it's 6 weeks, and divide it by 3.5. What is that? That's like 0.75% for a week. And I got to guess where the next option price is going to be. So I don't do monthlies because they just don't pay the same, and it's very challenging trying to figure out where the next 30 days is going to be. The rate of return to the amount of effort, aggravation, and uncertainty just doesn't work for me. I don't do monthlies, and I just don't do them. All righty. Next, BBAI. What is BBAI? Big Bear AI Holdings. Okay. I never heard of this company. What do they look like they're doing? Okay. Interesting. Look at our last couple of weeks. Down, here's the bottom, 530. Shoots up, 660. That's $1.30. That's 20%. 20%, then she drops, and then she shoots back up again. Yep, she should be coming down. Should be. Okay, 30-day high was pretty close. Okay, what makes us think it's going to go and break it? It just doesn't look right. Sorry. So on free, 81. Okay. Despon, reset router, you might have too much traffic. That could be, because I do have 7 items streaming, plus 2 TVs, 1 computer, and another TV out there. Yeah, I got quite a bit going on the router. All right. Michael, I don't do SoFi. We already talked about that one. Chad, XLE. What is XEL, Chad? XEL. Excel Energy Inc. Okay, Chad, same thing I told everybody else. I don't do monthly options. Okay, the numbers just don't work for me. Johnny, ODTE only. Well, good for you, Johnny. I don't do that. Okay, 1 day to expiration. Yeah, no thanks. A little too much caffeine needed. What else do we have? Okay, JB wants to take a look at Pfizer, PFE. Didn't we already look at Pfizer earlier? Okay, Pfizer. Let's check it out. Okay, top, bottom. Where was it? Where is it? Down, up. That's basically it. 25.86. The 26s are going for 45. Well, that looks pretty good. Well, let's zoom in, see what she looks like. Okay. High was yesterday, which means looks like she's coming down now. Okay, Andrea wants to take a look at Hewlett Packard, HPQ. Ooh, Andrea. Now, don't get me wrong, Andrea, I love Hewlett Packard, okay? But I'm waiting, because we're bottom fishing. It's at the low of the year, which means, okay, she's either going to go out of business or she's going to turn around and go back up again. It's Hewlett Packard. It ain't going anywhere as far as I know. At least I haven't heard anything about it. KK Supreme wants to take a look at Apple. Interesting. Unfortunately, missed the boat on that one too. Okay. Here's the high. It drops down. Last week was the bottom. There's the run up there. Now she's pulling back. So we missed that one by a little bit. Okay. 30 days. Bottom, shot up. Now she's pulling back. Ooh. Okay, Death Spawn wants to take a look at Seagate, STX. Hell no. I don't buy at the high. Look at it. That's at the high of the year. No thanks. What do we have over here? Michael. All right. Uh-oh. Here we go. Passport Eric. So you sell at the money and focus more on premiums. Absolutely. KK Supreme, what do you do about taxes? Well, it all depends on how you have your account set up. Is it in your personal name? Is it in your company's name? Is it in a family trust? How is it being held? We'll give you the exact relationship to how much taxes you got to pay. Because if it's in a corporate account, okay, and the corporation just so happens to be in a state where there are no taxes, imagine that. No taxes on corporations. Depends on where you're incorporated. That's if your trading account is registered in that state. Okay? So I'm not a tax guy. I'm not a tax professional. You should always ask someone who knows more than me, which is a lot of people. Because I don't know very much about taxes. KK Supreme. With all that buying and selling, your tax liability must be crazy. Okay, I'm going to tell you again, KK Supreme. If my account is held in the name of the corporation, I would have to pay corporate taxes. Now, if the corporation is in a state where there are no corporate taxes, and there are a few of those states, then there's no tax on the profits. Microsoft, what strike would be safe for next Friday? So, Eric, I can't tell you that. Okay, I can't tell you what to buy and what to sell, Eric. Okay, you want to have a conversation? Drop me your number. I'll give you a call personally. I don't do text. I don't do emails. I don't do WhatsApp. I don't do any of those. Okay, you want to have a conversation with me? Do it old school. Pick up the phone and call. Reach out and touch someone. Jay Collins, I want to learn this, but I am dumber than a fifth grader. It's not that difficult. Jay. Okay. Oh, look at this. Ted's back. VFC possibly. Nice premium. Let's check it out. VCF. VCF. Delaware Investments, Colomon Income, blah, 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 blah. No dividends. I mean, sorry, not no dividends. No options. Okay, VCF. You sure it wasn't VFC? VFC makes more sense. Vino, hey James, do you look at after hours prices? Nope. I usually look at it in the morning, Vino. Okay, so here at night, I look at what you guys want to see. So you guys give me stocks to take a look at, and I run it through the mill and see what it looks like at the other end. But for the most part, most of my trading is done in the mornings on Mondays. So Tuesday, Wednesday, Thursday is more of a balancing act. What did I buy? What did I sell? What did I collect? Where is it at? Where does it look like it's going? What should I do? Okay, those are all very simple. Jeff, how about Lowe's, L-O-W, a dividend king? Jeff, it's coming off the top. Check it out, Jeff. 30-day bottom, 30-day top, profit taking's taking place. Okay, so once she comes down, she could turn around and go back up again if you like Lowe's. Because if you think about it, Jeff, it does the same thing over and over and over again. All right? Take a good look, Jeff. Okay, down, up, 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 down. It does it all the time. Stock do two things. That's it. They go up and they go down. It's your job to look at the chart to see where it's at the moment. So look at the last 30 days. Okay, 30-day bottom, she shot up, 30-day top, now it's got profit taking, so now it's coming down. If you really like Lowe's, wait a couple of weeks. Okay, maybe 2 weeks. And then she'd be down around here somewhere, turning around, going back up again. Because that's all they do. They go up and they go down. That's it, that's all. Uh-oh, 15 minutes left. Do you sell calls or do you do puts? I do both, but here I'm only teaching the covered call. What am I drinking? In this glass, it's an herbal tea that's good for the vocal cords with some honey, ginger, and cinnamon. And then the other one is just plain water. Because you may not know this, but before I stood in front of the camera, I was very shy. So talking for 2.5 hours straight every single day, twice a day, takes a toll on the the vocal cords. And I just had teeth surgery the last week or the week before, and that's still recuperating. So I'm in bad shape, so to speak. Push Pinder Singh. Okay. What are my views on gold and silver? They're great storage of wealth, and both of them are going to shoot up really high, really fast. Just use other phone for reading comments. Okay, Chrysler, you do realize I have 1, 2, 3, 4, 5, 6, 7, 8. I got 8 iPhones in front of me, each one going to a different channel, and each one having a bunch of different questions. So my son Jacob's supposed to be working next week. So hopefully we'll try to get some of this mess squared away, so to speak. Kuja King invites you to co-host. I'm going to decline because I have no idea who that is. Anyway, let's keep on going. Obey Hadim said hi. ABT. What's ABT? Why are the videos backwards? It's a YouTube and iPhone thing. ABT's Abbott Labs. ABT. Ooh, check that out. Abbott Labs should have a nice bounce any days now. Think about it. Okay, 30-day high, big drop. Now we're going sideways looking for the bottom, but that gap right there is going to fill eventually. And then you got to ask that question. Do I like Abbott Labs? Is this what I want to put my money? Anyway, 15 minutes left. See if we can get some of these questions done. Master P99. ROP, it's at a low. What is ROP? Roper Technologies. No, thank you. Who came up with that one? Master 99. I don't do monthly options. No. Okay, rule 4, weekly options only. Just started. How many trades do you do a week? Well, I have 7 different accounts, so it's probably somewhere around 400 maybe. What time frame? Hood to Wall Street. I do the 1-year chart, 90-day chart, 30-day chart. Okay, Master P, 99. Okay, Roper Technologies. I don't do monthlies. Michael, SoFi. The dividends just don't look as good as you think they are. Des, SCHD. Check out the profitability over the last 10 years. Not consistently increasing. Santos, MCK. Is that McKesson? MCK. McKesson, yeah, I was right. Okay. Interesting. What's happening with McKesson? Okay, here's the top. Here's the bottom. Shoots up, pulls back. Shoots up, pulls back, shoots up. Okay, so she's going up. She's at 826. Look at the bid and the ask. 860? Yeah, it's not even showing on here. So you can't go by the numbers if the after-hour numbers don't look right. And I don't buy anything over 400 bucks. This is 800. No, sorry. Who came up with McKesson? Santos? Sysma. Sysmos now? Is now a stock? Service Now. Interesting. Never heard of it. But take a look. Okay? She's bouncing off the bottom of the year. 3 days up. Now she's pulling back again. Okay, it's not on my list. I've never even heard of this company before. JB Oracle ORCL. Now I do have some. Top is there. Here she bounced. She's kind of going sideways now. Up, down, up, down. Okay. But I do like Oracle, and I do have some Oracle. What do we have next? K-Van, Microsoft crashed 7% after hours due to earnings. Okay. Jeff, we already looked at Lowe's. Len, is in the money or out the money better? Len, it's going to be a personal preference. Okay, in the money is safer. Out of the money has a higher profit potential. So it's going to be a personal decision. You know, do you want higher profits or do you want safety? Now, for me, most of you guys already know I'm for safety. I'm not looking for higher profits. Safety, preservation of my capital is my main concern. I have no desire to go back to work. Not that I'm not capable, I'm perfectly capable of working, but I've already done my 5 decades. 5 decades. My first job was in 1973, 1974, Old Man Simmons Farm. Yes, I worked on my farm as the first day, in my first job. And yeah, I was in elementary school with my first job. I was in 4th grade. But it was the 1970s, so it was a little bit different. So Old Man Simmons would drive up, beep the horn, and me and Bruce would jump in the back of the truck. Yep, we rode in the back of the truck into the woods. We cut wood. Oh, yep. We cut wood. We did farming stuff. We took care of the cows. We took care of the corn, the pumpkin, the squash, the tomatoes. Yep, all that kind of nice, neat, fun stuff. Let's keep on going. Michael Abv, ABBV. Interesting. You just missed out, Michael. Check that out. Last 30 days. 30-day high, 30-day bottom. 1, 2, 3. There it is right there. You missed it. You missed it by that much. Kevin, CVS. Ooh, now there's an opportunity, Kevin, right there. Okay? Take a quick gander if you like CVS. The high of the year, the low. Where was it? Where is it? Look, it's up, down, up, down, up, down. Look at that gap right there. Gaps have a tendency to fill. So let's zoom into that. Okay, here's the last 30 days. 30-day top, 30-day bottom. Where was it? Where is it? Look at it. Sideways, up, big drop. Now she's bouncing. I love a drop like that off of a 30-day high. Yep, this baby's going to turn around and go back up again. That's what it looks like. That's not guaranteed. There's only 3 guarantees in life, and this ain't one of them. All right, what else do we got? The Vigilante. Hey, James, what about Target? Ooh, I like Target. Now, Target, if you didn't know, is a dividend king, which means they got 5 decades. Yep, that's 10, 20, 30, 40, 50 years of consistent profitability. So you don't have to agree with what they do. You don't have to agree with their advertising. You don't have to agree with their marketing. You don't have to agree with anything with Target. They are a dividend king. 5 decades of consistent profits. But you missed the opportunity here also. The high of the year, the low, where was it? Where is it? Okay, down, up, down, up, down. So it's actually coming down off of a 30-day high. And I love coming down off of a 30-day high. See, 30-day high, 30-day bottom. Shoots up, profit taking. As soon as it finds a new bottom, she'll turn around again. Because that's what stocks do. They go up, they go down. And then, hold on, they go up again. All right, what else do we have? Oh, Wisdom, 8243. Profit or profit? Interesting. I like profit, okay? Calm pays dividends. Yeah, but I think they're a monthly, aren't they? CALM. Calm Main Foods. Yeah, they're a monthly, and I don't do monthlies. Now, we're going to change in a little bit. We're going to change a couple of strategies, so we actually are going to do the monthlies. I got a new trading strategy I want to come out with, so that would be a new channel also. And I think that will be dividend capturing. It's a lot easier for people who have small amounts of money and want to start. Because this here, for me, remember, now I'm 62, so I'm investing my life's savings. So all the money I've made throughout my life is into the market. Now, you may think that's risky. Well, it's not risky if you know what you're doing and you've been doing it long enough, you know, and you're consistently profitable. So you got to remember, I've been doing this since 2011, actually before 2011, but it is verified through blog posts, videos, and now live videos, okay, over the last 15 years. So I do have a good track record for what I'm doing. So for me, it's not risky. Okay, and it's risky for someone just coming in through the door saying, hey, let me, no, that's risky. All right. What else do we got? All right. Okay. Namdalo, what app are you using? That is called Think or Swim. And that is a trading platform offered through Charles Schwab. Okay, Jeff, we already did Lowe's. Kurt, Cody, dump or keep. Cody, C-O-D-I, I have no idea who they are. Okay, and the reason I have no idea who they are, they're a monthly, and I don't do monthlies as of yet. Okay, so they don't make any sense to me. So I can't give you advice one way or the other, and I don't give advice. Blackfoot, Caterpillar. Ooh, I like me some Caterpillar. Nope, too high. Okay, it's too close to the high of the year. There's no predictable play there. Harden, TSLL, TSLL. Okay, no real play here either. Okay. The high is here at 29, the bottom here at 7. Okay, down, up, down, up, down. It's coming down at the moment from the 24 high. If you like TSLL, now I do have some. Okay, down, up, down, up, down. Go. So right here, it looks like she could be changing direction. Haggis Herb, PFLT. PFLT. Monthly, no thank you. Why not Roper? ROP. Okay. Master P99. All right, I'm going to say it again for like the 10th or 15th time for the evening. February, March, May, August, November. Those are months of the year. That is what is called a monthly optionable stock. Rule number 4 for me, weekly options only. Michael, Intel, INTC. No. Now, the way I'm saying no for Intel, look at your last 30 days. 30-day bottom, 30-day top. Now she's dropping with that big drop there, a big gap here. Yeah, that's not going to be sustainable. She's going to drop back down again if you like Intel. Okay. NGR gold might be on the highest, but what are your thoughts? GLD. Okay, my thoughts. Are you ready? NGR, okay? I don't buy anything at the high. Nothing. I buy nothing at the high. It just makes no sense to me. I'm a buy low, sell high kind of guy. WD, yes, we looked at Enbridge a little while ago. Cody, we already looked at Cody. It's a monthly. I don't do monthlies. Kurt, who are you responding to? Not us, obviously. Okay, so Kurt, hate to be the bearer of bad news, brother, but you're not the only one on the dance floor. Okay, there's 1, 2, 3, 4, 5, 6 7 cameras going. 9 different trading platforms, which means 1, 2, 3, 4, 5 different screens that I'm answering questions on. So no, you're not the only one here. There are other people from all over the place observing and asking questions. Okay, Michael, we already looked at AbbVie. We already looked at Cody. We already looked at CVS. Matthew, can I get a list? I'm looking at moving a majority of my investments into the 1% model. Now, Matthew, I always tell people who are really interested, practice first. Get yourself a paper trading account and make sure that you are right with what you want to do. It doesn't cost anything, just a little bit of time. But a little bit of time may be a good idea just to make sure that what you're thinking is correct. And as for the list, Matthew, dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on Warren Buffett's list. Okay, that's the list that I've tried. Vino, I appreciate you do this every night. You're welcome, Vino. Len, do you stream Monday through Friday at 9? No, Len, I stream Sunday night, Monday, Tuesday. Hey, what's that? Gene, thank you. Sunday, Monday, Tuesday, Wednesday, Thursday. I take Friday nights off and Saturday nights off. Sukara, can you join the community? Sure you can. Okay, the top left-hand corner, you'll see a little website, The10MinuteTrader. Just go there. The big black button says Live Daily Trading. That's the one. That's where you sign up. Gene Berman, what's going on? All right, back over to here. We got a couple of minutes left. Michael, Intel, next time, Roper meets that. No, Roper does not. Roper is a monthly optionable stock, and I don't do monthlies. Ron Smith, unless I'm not looking in the right spot. I don't know what we were talking about, Ron. I'm sorry, Ron, only because I got, 5 other screens and I got a bunch of different other conversations going at the same time. So unless there's more information to that little blurb, I have no idea what we're talking about or which stock we're talking about. Santos, thank you for that. Austin, what's up? Michael, we already looked at Intel. Chad, XEL tomorrow. TJ Hooya. Hey, what's going on? Okay, we'll look at stuff tomorrow. We're past 11. XL Energy tomorrow. Michael BRC tomorrow. Michael Coca-Cola tomorrow. We're going to do the same thing again tomorrow. I just want to make sure you guys know that I'm reading your questions. How long for me to rebound? Sorry for being off topic. Okay, so Mike Cato, I have no idea what rebound means. I mean, did you lose and now you're trying to rebuild? For that, book a call. We'll have a conversation. Or send me your number here, one or the other. But I have no idea what your situation is, so I really can't speak eloquently of it. Mike, BRC, tomorrow night. Haggis, Herb. Oh, is this oh realty as in, oh no, I don't do monthlies. Now, Haggis, when I say rule number 1 is never buy something you don't understand and you don't know. You've been here long enough that you know rule number 4 is weekly options only. O Realty is monthly options. I do not do O Realty. ITW, Illinois Toolworks, tomorrow, dude. Nicole, thank you for that. Haggis, if it was earnings week, will you still do options? Absolutely. Mike, BC, I already did that one. Draz, thank you, Draz. What is the program you are using? Okay, Draz, that is Think or Swim offered through Charles Schwab. Michael, DOV, that's Dover. Yep. If it's a monthly, just aim 5%. If you want to do monthlies. I don't want to do monthlies because you're trying to guess where is it going to be in 30 days. That's 4 to 5 weeks away. It's not as easy as you think it is. But if you want to do it, hey, more power to you. Nick Cole, Draz Think or Swim originally, but TD Ameritrade now by Schwab. Draz, okay, thank you. Bum, 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 bum. Okay, Ronald Smith, Horizon. Horizon? Yeah, we'll do that tomorrow. Oscar and Gremlin, how you doing? Ooh, Zugma, 3M, love it. Sorry, you just came in. All right, well, I'm usually done at 11, which is a couple minutes ago. Question, can you explain how you check call option pricing? I've seen you doing some of the math that I can't understand. Okay. ENGR, are you ready? Here's the stock price. These are the call options. That's the date. These are the strike prices. And these are the premiums. Okay, so whether you're doing calls or you're doing puts is really irrelevant. The number you should be looking for is what am I paying for an option or what am I selling the option for? All right, so whatever the stock price is, you divide it by the option premium and that gives you your rate of return for the week. Herbie, last week you did Microsoft for 2.7, January 3. Okay. Jersey, CVX, Chevron, we'll do it tomorrow. Michael, PayX, we'll do it tomorrow. Nico, 7, the charts on Schwab's Think or Swim. There's what it looks like Think or Swim, yep. Thoughts right now, 3x, 3 times a week, okay. Miss Christie, what's happening? Gayute, hello. That Winslow. James, love the content, thank you. Miss Christie, thank you. Dusty, guess who bought a leap call for Meta? Good for you, dude. I don't buy options, I sell them. Riley, 4% on TSLL this morning. Good for you. Nice going. Thoughts on Meta? Meta's only been paying dividends for the past 3 years. Not quite enough. Ronald Smith and profitability with the factor of tangibility. Okay. Ms. Christie, thank you for that. All right. All right, Gina, we'll take a look at Mara tomorrow. Mike, we'll take a look at Macy's tomorrow. Dusty, ain't going to happen. Okay, Dusty, I give this away for free. No way I'm going to discuss the Iron Butterfly. Okay, Michael, Duke Energy, Disney, and COM. What the heck is COM? C-O-M. I don't know what COM is. All right, so we're just about done. Thoughts on Humana? Johnny Ringo, we'll take a look at it tomorrow. I'm basically done. Does United Healthcare have weekly dividend? No, but it does have weekly options. How do you deal with weekly losses? I don't have weekly losses. Isn't that funny? Okay, so I've been doing this for a very long time, so I try to avoid losses. And remember, a loss is only a loss when you agree to take it. So if I buy a stock for 150 and it drops down to 100, did I lose 50? No. It only dropped by 50, but I still own it. So it's not a loss until I agree to sell it for less than I paid for it. Rule number 2, never sell for less than you paid for something. Dusty, Steel Dog with a Copper Bull Tango Alpha 360 no scope. Nice, Dusty. Not a lot of people know that is, but it is what it is. Charlie, Kimberly Clark, gotta love them. Death Spawn. Oh. If you make tea, use the same thing, but add turmeric and ginseng. Oh. Well, I put ginger, honey, cinnamon, and it's an herbal tea specifically for the throats. Do I drink milk? No. Doxy Chong, crypto? No. So do you reinvest dividends or take profits off of them? So Spider-Man, I use my profits to pay my bills. Cause and Astra! How can we inquire to learn other strategies with you? You can become a paid member, and then you can ask in the paid morning group, Cause and Astra. Okay, you and I had a conversation. I told you I wasn't going to try to sell you anything. Okay, and I have no intention of selling anyone anything. But you got to remember, I have to. I appreciate when you guys respect my time. Okay, so I'm here and giving this to you for free. So certain things I got to say no to. So other trading strategies are a lot more complex and they take more effort. Michael M.O.'s Altria. We never spoke on the phone. Sure we did. I was pretty sure we did. What's your strategy? Day trader? No, I'm not a day trader. Nope, never. I'm pretty sure we did, but hey, what do I think about the Honeywell? Ooh, I like Honeywell. We'll take a look at it tomorrow. Cause, send me your number, dude. I'll give you a buzz. But for now, the time is near. And so I say good night to you all. Wait a second. Now it's time to say goodbye to Jed and all his friends. He kindly like to stop to thank you for kindly stopping in. Just come back this week, just come back next week to this locality to have a heaping hollering of our hospitality. Hillbilly, that is. Kick your shoes off. Stay a while. Y'all come back now, you hear? Alrighty. So, just saying goodbye. You guys have a nice night, and we'll see you all again tomorrow. Tomorrow. We'll see you tomorrow. You're always a day.